Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the closing market edition on Business Today, where we share with you how the trading session has panned out in the session today and what do we expect in the last half an hour of trade. Where are the focus attentions? Where are the stocks in terms of moving action that we can actually see we've moved up to the high point of the day, yet again crossing over the 26,000 mark, which is again brought back the bulls on the focus now. A lot of sectors that are supporting the markets. You have PSU banks again running the show. You have over a percent gains for the PSU banking index. You have the IT index, in fact, that's up by 3%. PSU banks up by over a percent. You have the Nifty bank that's hovering higher. Autos that are up. Midcaps that are driving the show as well. Pharma and FMCG. These are all the sectors that are still holding up strong in the closing edition of market today. Let me also help you understand in terms of the stocks that are hovering higher. Max Healthcare, remember, strong show in earnings and therefore it is moving up. You can see HCL Technologies, Infosys, Wipro, TCS, at least 4 of the top 5 movers on the Nifty are from the IT pack, and you can see substantial moves across the board onto them as well. When we look at some of the laggards in trade towards the end of the session, well, you will be able to find names like Tata Motors, Coal India, Maruti, Bajaj Finance, Grasim. These are the names that are still struggling in trade as of now. But of course, we will be welcoming our guest on board to help you understand what exactly is the focus point of the market and how should one strategize the moves here. Let me welcome on board Mr. Avinash Gorakshakar, who's joining in on the show with us to share with us his views on the markets. Warm welcome to you, sir, and thank you so much for taking the time out. Just wanted to get a quick comment on the markets overall. Yet again, a strong showing on the Nifty, 147 points higher as far as the Nifty is concerned. We are above 26,000 odd mark. Where do you see the Nifty is headed? Do you think this time around the attempt will be successful in terms of the move that we are seeing in the markets? Will we be able to, make a dash towards the erstwhile record high levels?
Good afternoon, Sakshi. See, my sense is that today has been a good day. I think markets have gone up quite significantly. The only, I think, expectation is that the US trade policy happens very soon. As yesterday, Mr. Piyush Goyal has said that things are going as per plan. And secondly, I think, hopefully if the FIs start buying, because I think that is one trigger point which is missing in the market. Domestic flows have been very good. We have been seeing a lot of domestic SIP money, being invested in the markets. And of course, the kind of response we have been getting for the IPOs, that has been a quite positive factor. We saw growth after that physics wala. So basically, I think today Tenneco got listed. So I think, the markets are definitely giving a thumbs up to good quality businesses. So that is definitely a good positive. But I think looking at the kind of supply of paper which is, expected to hit in the month of November, I think you could see a little bit of profit booking, once the market goes up slightly from here on. So I think it would be a stock specific call, Sakshi. I think index, to go up beyond 26,200, the all-time high, would take a little bit time. I think you might have to wait for the month of November. Maybe after December, this looks very much possible.
Absolutely. I wanted to bring your attention to the IT stocks that are, surging through the roof today. Over 3% kind of a surge we can see across the IT sector. 1,100 points of a move on the index itself. Many of the stocks from frontline IT space are up by almost 4-5% odd. Look at HCL Tech, look at TCS, even Infosys, Wipro. They're all up substantially in trade. Remember, this also comes in at a time when we've been seeing the global peers, the global technology peers on the Wall Street seeing some pressure of late. What's the sense that you have on the IT space, Avinash ji? Do you think this move has more legs to go? What is the reason behind this sharp surge there on the IT pack?
See, I think you're right in saying yesterday, Sakshi, on the US market, there was a major sell-off on the artificial intelligence stocks. And I think, now there are a lot of, noises being made by very influential people. Yesterday, Sundar Pichai, the CEO of Google, also mentioned that valuations in the AI space have become extremely expensive. And these are really unsustainable. And I think to a large extent, foreign FII flows have actually targeted AI companies in most of the other, developed economies. Fortunately or unfortunately, in India, there are not many AI companies. So, the flows did not come here. But if you look at our IT companies, one thing which stands out is that all these companies are reasonably valued. They've got very good, healthy order books. Their margins are also better. And I think, once the US India trade deal happens, I think a lot of uncertainty is going to be cleared. A lot of pending IT contracts are going to come in. And I think that is why today the markets have taken a liking to stocks like HCL Tech, TCS, Infosys. I would say that this is a very good opportunity for investors to park in some of their money now, because once this clarity comes, you're going to see a further re-rating on the IT stocks. So I think IT definitely will remain in flavor. And considering the sell-off in the AI stocks, India presents a much better opportunity in terms of the growth. Although the growth could be steady, this is a more safer kind of growth, and where the balance sheets and the valuations are very reasonable and not very, very, expensive to that extent. So that possibly could be the reason why, there's a little bit of interest now by investors here who are lapping up the Indian IT stocks today.
Okay, fair point. The other space that's truly buzzing is the PSU banks that has been already garnering some pace over the last couple of weeks, Avinash. What's the sense here on PSU banks for those who still have not had a chance to, grab a large part of share within their own investment portfolios of PSU banks? Would you say this is still a good time to bet big on the PSU banking story?
Yeah, I think, see, basically all the macros and the levers are falling in place. I think retail inflation has come down to a record low. So typically, now the markets are penciling a rate cut sometime in the month of December. Now, how quickly it comes remains to be seen. But I think if you see the second quarter numbers, I think banks have done very well, especially the PSU banks. Banks like SBI, Bank of Baroda, Canara Bank. Private sector banks have lagged. So I think, within the private sector banks, we still continue to like ICICI Bank, although numbers were not all that great. But if you ask me whether there is an opportunity to buy these banks, I think still maybe a bank like PNB, Bank of Baroda, Canara Bank, SBI, these could be definitely be acquired, slowly if an investor has a 12 to 15 month time frame, because clearly, the Q3 is going to be the start of the busy season for the banks. And whatever GST cuts have been announced, whatever interest cut rates benefits are going to flow in, plus rural demand is growing. I think all that will obviously lead to a bigger consumption kind of trajectory. And banks are always there to support the liquidity. So my sense is that, starting the month of October till this coming March, you're going to see a very strong improvement in their profitability numbers, and asset quality, quite frankly, has been very well maintained. So, these are the same PSU banks which are not all that great about 4 to 5 years back, but today they have cleaned up their balance sheets. Their asset quality levels are much better. So I think definitely these banks could give a decent risk reward to investors even at the current levels.
Okay, fair point. I hope this has also given a large part of sense to all our viewers to understand what really is happening here. Now, before we focus on some of the other big movers, let me also focus on where there is pressure in the markets. There are some of the stocks that need our attention, and we will be focusing on that. One is Sammaan Capital. The shares have tanked today almost 9% after a negative development from Supreme Court. The Supreme Court has questioned the friendly approach by CBI and the MCA investigating allegations of India Bulls Housing Finance, as is the name that Sammaan Capital was known by earlier. Remember, the stock is now down 10%. It's at the day's low. The Apex Court has questioned the market regulator SEBI's reluctance to investigate and also questioned the double standards as well. Some strong statements coming in from the Supreme Court right there. Remember, the CBI has been asked to file a response to clarify its stance, aiding that it will strengthen the hands of enforcement directorate. The ED in response has assured a joint meeting of officers of ED, SBI, SEBI and the SFIO in the next 2 weeks going forward from here. Remember, the ED has highlighted that it has filed complaints compliant with the economic offences wing of Delhi and Mumbai police, but no cognizance was taken. Now the Supreme Court will hear the next case on December 17. Remember, this was as part of essentially a PIL that was filed with the Supreme Court to seek regulatory action, is what the response from Supreme Court has come in from. Avinash ji, how do you see Sammaan Capital's sharp downward reaction right there, with the Supreme Court now pulling up the country's biggest regulators who had been investigating Sammaan Capital and erstwhile India Bulls Housing Finance with a lot of fraudulent practices that were initially found out at the organization?
No, I think Sakshi, this is something which is very difficult to predict. But I think this court case has been an old court case, and I think whatever decision comes from this case is going to have a very significant bearing on the company's future. I think Sammaan Capital was in the news for basically the open offer and the entry of new promoters. But now with this development, I think we'll have to wait and watch what is the management commentary here, what kind of thought process the management holds. And typically, in these kind of stocks, the stocks have actually gone up also very fast. In fact, if we see the rise of Sammaan Capital, which was earlier India Bulls Housing, so here the stock has moved up also quite swiftly in a short period of time. So this volatility in the stock will continue for some time till we get little clarity from the management. But I would say that this is not going to be such a big barrier in the overall growth kind of trajectory what the company is planning. So I think investors who have already purchased the stock can hold on. I think there's no need to panic. There will be some clarity coming from the management very soon. But fresh buying can come only when we get little bit of commentary from the management on the update of this case.
Absolutely. I hope, viewers will take cognizance of the fact that the stock is under review and we can actually see further pressure build up. Now it's down by 11.5%. We'll see how things progress. But right now it seems to be in a tough spot right here. Let's also focus on some of the other recently listed stocks that are in fact trading lower. Let's talk about Groww first. One of the recently listed stocks, remarkable 94% of a rally post getting listed, on Groww. 100 rupees was the issue price. It moved up very swiftly to 188 and thereafter, but it has today hit a 10% lower circuit. Now, remember this post-listing frenzy has jolted traders after more than 30 lakh shares of Groww, the parent company Billion Brain Garage Ventures, were pushed into NSE auction window, signaling a deep short squeeze. A section of the market had expected a sharp surge to cool off and initiated short positions, only to be caught off guard as the rally continued to accelerate for 5 straight days. Let's try and understand what is going to be in the offing for Groww shares. Avinashji, when Groww's IPO was going to be coming up, again there were questions that were being raised on the valuation part. We saw swiftly the company getting listed at a smart uptick premium. Thereafter clocking in a market cap of over 1 lakh crore rupees, surpassing even BSE's market cap as well, and probably becoming as big as cumulative market cap of a lot of other brokerage houses that are listed on the stock exchanges also were to be seen. All of this was already being seen in a frenzy, and there you see what has happened is that a lot of these short traders have found themselves now in the light of having to pay heavy penalties because of their positions and not having the ability to deliver what they promised. How are you looking at Groww at this point in time, sir?
See, Sakshi, I think there's a fundamental rule in the market that the law of gravity takes over, that whatever goes up fast has to come down. And I think, in 5 days, the stock went up by almost 90%. So, I think people who actually made money should be happy about it. But I think, in the market, unfortunately, most of the retail investors got stuck up at higher levels. So this was bound to happen. I think short sellers, definitely also thought that they could short sell this stock, and possibly the stock did not, go as per their expectation. So that created another issue. But I think, as you rightly pointed out, for a company which is not very old, if it exceeds the market cap of BSE or some other broking companies, it actually shows how the market was for this company in a short period of time. So fundamentally, we continue to like the stock. I would say that, if the stock, say, corrects to even 140 or 150 odd rupees, I think that would be a good long-term opportunity because, the management here is very energetic, very aggressive. They have now sounded off plans that they would be getting into wealth management. And they are now the number one online broker in India, taking Zerodha to the second position. So my sense is the capital markets, as long as they grow, the retail business, the retail, clients grow, this company will continue to grow. But in the short term, a lot of volatility will be there. And I think, it's still a long time, maybe around 140, 150. We could see levels of those levels coming back again. And at that point of time, maybe some value buying could be considered. But as of now, no fresh buying advised.
No fresh buying advised as of now, so be wary of the dip that can extend to even 140, 145 kind of levels as well. Let's look at the other listed peer, and that's Physics Wala that saw its debut again, listed at a 34% kind of a premium, and went on to see its founders also become billionaires with the kind of IPO launch, richest teachers being formed with Physics Wala. But today, just a day after getting that substantial gain on the listing day, it's down by about 7.5% at 143 levels. How do you assess Physics Wala?
So I think even in physics wala, the good part was, Sakshi, if you see the oversubscription level, this issue was oversubscribed just about 2 times. Unlike Groww, which got a very rousing kind of reception. So, typically here the markets were not expecting a very big rise, but I think looking at the scalable model, looking at the content which the company has generated and the online opportunity, I think, here also there's a little bit of excitement considering the fact that, this has been one of those longly awaited IPOs. So I would say that, here somebody who's got a 12 to 18 month view can still hope to make some money. Of course, guys who want to make only listing gains can even exit now. The stock was offered at around 102 rupees. The stock available is around 143. So there's a decent upside even now. But I think clearly once the company starts generating their quarterly numbers, the management starts talking to the analyst community, I think a lot of hard work remains to be done. And I think once that comes out in the market, how well they are able to deliver on the numbers is going to be critical. So I think medium-term prospects definitely look good, but it all depends on how the delivery happens going forward.
Absolutely. I hope this has also truly helped all our viewers out in assessing what's going on when it comes to these IPOs and, of course, the kind of listings that we are getting. Tenneco Clean Air also got listed today, holding above 23% kind of gains in trade today as well. Of course, a lot of them are also lined up to come in. But large part of the peak, do you think, of seeing IPOs, is that over for this year, or will we see, further activity in the primary market space? This is also being seen as the space that has drawn out liquidity from the secondary markets for the last couple of weeks. So I want to understand whether the frenzy will still be there for us to see, or is it cooling off?
So I think the frenzy will continue, Sakshi, because there are many quality companies which are expected to go public. I think it's finally the valuation comfort.
Yeah.
My sense is that, when you make a 80-90% IPO kind of gain in a company like Groww or maybe Physics Wala or something like Tenneco, I think it gives a clear incentive to the merchant banker as well as the investor that they could try their luck and obviously get the money, the return in a very short period of time. See, listing gains are one thing, but I think how these companies perform post listing after the next couple of quarters is also equally important. And I think November is also going to be a very busy month. We have been hearing from news reports that almost 35 to 40,000 crores is going to be raised in the month of November alone. So I think, the pressure will continue. And that's the reason I told you that secondary markets are unlikely to move up in a hurry. Today's move has been quite good, but I think to sustain beyond 26,200 is going to be a challenge, because typically what happens is most of the large institutional investors or even the retail investors, they sell in the secondary market and apply in the primary market. So I think you will have to face this supply of primary paper at least for the next, at least 2 to 3 weeks going forward.
Okay. In fact, I also, when I forgot to ask you on the IT space when we were talking about the sharp surge on Infosys particularly, because Infosys is going to be in focus tomorrow. It will open its 18,000 crore rupees share buyback, and what we will see is that the window will open tomorrow and close on November 26. Remember, the proposal approved by shareholders will allow IT company to repurchase up to 10 crore fully paid equity shares fixed at a price at 1800 rupees. Right now the stock is at 1540. Eligible investors, those who had been holding Infosys shares in their portfolios till November 14, will be able to participate. Let me try and understand, what are you advising those who have Infosys in their portfolios and are eligible? Should they be participating here, and what could be critical for them to watch out for as to a deciding factor on that?
No, I think 1800 is a very attractive price, Sakshi. I think investors who hold Infosys shares should definitely try to tender as many shares as possible. Of course, if the acceptance ratio comes, say, around 45 to 50%, there's a good chance that, they'll be making a decent amount of profit. Of course, once the acceptance ratio reduces, then the level of acceptance will obviously reduce. But at 1800 rupees, I think the investor makes a straight gain. And I think normally what we have seen traditionally is after the buyback is over, the stock starts moving downwards. It starts going a little weaker. So maybe, till the time the buyback is on, the stock will be maintained. But once the buyback is over, I think you're going to see levels slightly lower. And that I think will be a good entry point to make an investment again, hopefully, because we are looking forward to a better December and a March quarter from Infosys. So I think, net, I think there could be a good arbitrage opportunity for people who want to tender their shares now and maybe later on buy from the open market again.
Okay, fair point. I hope this has also helped all our viewers understand as to what should be the strategy there. Let me also just bring up a few other sectors to see where the opportunities are presenting themselves for our viewers to really see. Okay, help us understand, Avinash ji, in terms of, the buzzing sectors right before the GST cuts were announced or GST 2.0 was announced were clearly auto and the consumption basket. By the end of Q2, we've had just about slight hint of where the benefits could be accruing and where in the second half maximum benefit of GST rollout will come in. But which are the pockets that are attracting you in the consumption basket, sir?
So I think within the consumption basket, FMCG companies definitely look interesting because clearly the monsoon has been much better than expectation. Interest cuts have been happened, GST cuts have been announced. So I think, stocks like Marico, Godrej Consumer, for that reason, even Britannia, I would not be surprised that, the volume growth in the third quarter, Sakshi, is going to be much better than quarter two. And I think Hindustan Liver Management also sounded off quite positive, once their results were announced that October to December could see a good strong volume growth, and volume growth is a key indicator that demand is coming back. Rural demand, I think, will be a key surprise element this time. So I think, 2-3 FMCG companies like Dabur, Marico, Godrej Consumer look pretty interesting because these are product categories where the GST cuts are quite sizable. So I would say that, this could be an interesting space. And of course, from the auto space, I would say that October to December is supposed to be a slightly softer period, but January to March is going to be a good launch period for many companies. So I think something like, Mahindra and Mahindra could be looked up. I would not be surprised that M&M is going to maintain their growth rate very well, not only in the UV and passenger car segments, tractor segment, but even in the electric vehicle segment where, they are already having a very long waiting period and their models have been running very successfully in the market. So I think M&M in the auto pack looks interesting. And of course, within the FMCG pack, I think 2-3 companies which I mentioned can definitely be, taken on a SIP mode also because we believe next year is going to be a very strong year.
Okay, fair point. Amnashi, I also wanted to understand within the mid and the small caps, where are you finding the opportunities? We saw the mid caps hitting record high levels in this last few days, and we are seeing momentum again come back to these broader markets. How are you approaching the mid caps as of now? What is the best way you are advising clients to tackle this? Because again, like we have discussed often, retail investors' clear focus has always been mid caps and small caps.
So I think, within the mid-cap category, I think sectors like capital goods, material equipment, cement, or for that reason, auto components, these are interesting kind of sectors where you're having a lot of variety. In fact, in the auto component space, there are stocks like Uno Minda, typically a Sundaram Fasteners or Lumax Industries. These are very good bets, now to bet in the current scenario because volume growth is going up. And within the capital goods sector, I think, companies like Action Construction, although it's not a pure mid cap, but I think categorizes as a tier 2 kind of, player in the material equipment market. So that could be an interesting opportunity. And I think, yes, cement, Heidelberg Cement, has come out with very strong numbers in a very seasonally not a very great quarter. I think the second half is going to be equally good. So, I would not be surprised that Heidelberg Cement is a small cement play where I think, it categorizes as a good, mid-cap cement bet. So these could be interesting bets, Sakshi, but I think you need to give at least 6 to 8 months for, the numbers to play out.
Okay, fair point. Also bringing out for you, Avinash ji, to focus on the pharma space, especially names like Max Healthcare that came out with the earnings right at the fag end of the earnings wrap and posted promising results there. Pharma, healthcare, how are you looking at this basket as of now, both in terms of valuations, the kind of earnings performance that has come in and the opportunities going forward, sir?
So I think, Max Healthcare definitely came out with a very good set of numbers and the stock reacted also positively today. I would say that some more buying could come in because the numbers are much better than what the street has penciled in. But I think if you look at pharma names, the large companies which cater to the US market, specifically something like a Lupin or maybe a Sun Pharma or Torrent Pharma, could be more reasonably attractive bets. Because my sense is that very soon we could see the India US trade deal signed up, and pharma as a space has not been touched by the Trump government. So here I think you could see very strong numbers. In fact, Lupin reported very strong Q2 numbers, and the outlook also for the next 6 months is looking quite promising. So I think pharma one has to be a little patient, but I think you're going to get a lot of value once things stabilize. On the global market side. So I think these 2-3 companies from the pharma pack are something which we have been very positive, and we are suggesting it to our investors also.
Okay, fair point. And any kind of places that you still are not comfortable with right now, Avinashi, that you would want to still stay away from and feel that a lot of pain still has to play out?
So I think clearly, from the chemical space, from the export market space, if you leave alone IT, I think even as of now, the opportunity in the export market is yet floundering. Maybe my sense is that something like textiles, chemicals. For that reason, even metals. These are sectors where we are slightly apprehensive. Our sense is that we need a little bit of more clarity on the tariff side and how geopolitically markets perform. So I think these 2-3 sectors would be a little avoid as of now from our side.
Okay, got that. Let me also just quickly bring up for you one of the other spaces that is clearly buzzing, and that's the defense aspect as well. Defense, shipbuilding, these are the names that are clearly buzzing in trade. Once again, there is hope that US-India trade deal could flourish. There is also hope that, with our ministers in Israel, there could be any kind of big announcements that could come in on the defense pack as well. How are you looking at the story unfold as of now?
So I think defense, along with that, railways are two sectors which are now gathering momentum because, the pre-budget discussions have started. I think we're going to have the budget in February. So, a lot of expectations that defense would again get a bigger allocation. And I think looking at the kind of geopolitical fabric across the world, I think it has become very clear, Sakshi, that some war happens across the globe at some point of time. So defense is going to be a very strong opportunity for the next 3 to 5 years because India wants that most of the defense equipment actually is made in India, and to a large extent that has partially succeeded. So I think stocks like Bharat Dynamics, Bharat Electronics, HAL, these should be the large companies which I think investors should focus on because these are going to be the primary beneficiaries even going forward. Of course, within the shipping sector, you have Mazgaon Dock, Garden Reach, but I think clearly HAL and Bharat Electronics are more stable names. And as far as the railway part is concerned, today I saw some softness in stocks like Jupiter Wagons, or for that reason Titagar. These are also companies where there could be a little bit of bounce back because wagon companies have underperformed for a long time. And I think hopefully in the coming budget, if there's a new wagon procurement order announced by the government, you could see a kind of a very big bounce back again in these kind of stocks.
Absolutely. All right, Avinashi, thank you so much for being with us on the program then. And of course, giving us a broad insight into markets and various opportunities. Always a pleasure having you with us. Thank you for your time. All right, viewers, we'll start to wrap up. A minute to go before the market shut shop for the day. Right in the middle of the week, 3:29 p.m., you can see 26,045. Yet again, this attempt to go beyond 26,000 and make a dash towards the erstwhile highs. Whether we will be successful this time is something for us to continue to watch out for. But strong moves on IT, on PSU banks that has led the show today. A lot of individual stock-related names that have also performed well in the trade as well. So banks, IT, you can see even the Pharma, Auto, FMCG majors, even the broader markets that are actually supporting the sentiments at this point in time. Max Healthcare, HCL Tech, Infosys, Wipro and TCS among the top movers on the Nifty along with Sun Pharma. On the downside, you have Tata Motors, you have Coal India, you have Maruti, Adani Ports and Bajaj Finance as those that have still declined in trade. Any smart movers in the kind of moves that we are seeing on the broader markets. Nifty 500 front is something that we can definitely watch out for as well. When we look at the moves there, you will be able to spot a lot of stocks like JP Power, that's up by 14%, L&T Tech, Linde India, Intellect Design, all of these stocks that are actually buzzing. On the downside, now 13% lower for Sammaan Capital that we addressed. Billion Brain Garage Ventures, that's the parent company of Groww. KEC International, Anand Rathi stock broking is down by 9%. A lot of momentum here. Initially, Physics Wala is down by about 8-9%. HBL Engineering is down in trade. You have Orient Electric, EPAC, prefab technologies, that's also down in trade. All of these stocks that are still under some pressure. We'll leave you at that with 26,050 as the final print on the Nifty right now, viewers. But do stay tuned on to Business Today Television as we continue to give you coverage from the world of business and finance after the market hours. Stay tuned.